Good morning, everyone. Welcome to our today's show, Eyes on the FANG, where we are going to measure and give a look at the biggest tech names on US, and starting with Apple, Amazon, Facebook, Microsoft, Netflix, and Google, the biggest tech names, the biggest leaders on the market that push the market higher. And from last week, if you remember, last week on Wednesday before the market opened, 8 a.m., I said, are the tech bulls getting tired? And we had day one on Apple after that video, big red day on Wednesday on Apple, and a follow through with the rest of the market on Thursday and Friday going into this week. So it's time to measure what's next, how we are looking for the FANG names, and trying to build a trading plan and help you the best possible way. So let's look into those charts, starting with Apple. Apple was the biggest one to fade. If you remember, I posted the video at 8 a.m. last week on Wednesday, and for giving clues that the tech bulls could be tired. So we opened with a big gap on that day, a big gap up, and fade all the way, closing the gap and engulfing the previous day, going back all the way into the 8-day moving average. So that was actually a very, very nice pre-market analysis at 8 a.m. The market opened 9:30 a.m., 1 hour and a half later after the video, and we had a big fade all the way into the 8-day moving average. So it was a beautiful calling the top here on Apple. And we had a follow through for 1, 2, 3 days into the close of the week. On Friday, they tried to push the market and Apple back above 21-day moving average. On Tuesday, they opened with an inside day, and yesterday another inside day, and trying to hold the bull case scenario. So one of the things that everyone should be asking now is, now what? Where we stand, and where can we go from here? One of the things that we need to look is if we are going to have a bigger correction, or if this was just a pullback after the market going, and by Apple principle, going parabolic, a big parabolic move after earnings, and or if this is just a correction for a parabolic move, or if we are going to morph into something else. One of the things that everyone is highlighting is that Nasdaq pulled back below 21-day moving average, and the Apple also pulled back below the 21-day moving average. We are currently, and yesterday we stopped exactly at the 21-day moving average, so 119. So that's the first big level. The longer we stay below the 8 and 21-day moving average, the higher the odds we morph into something different, and we morph into a big correction. But we also need to be open-minded, because in the past, we had a big correction here with the Apple going below the 8 and 21, and the next couple of sessions it resumed back above the 8 and 21-day moving average, and after earnings, boom, big move up. So Apple, it's going to have an event. I believe that's an event next week, and right now I believe Apple, it's pausing and waiting if something will come from that event. One thing is for sure, we are still holding, while we are above Friday lows, we will not start any big correction, okay? So on the short term, yes, we are vulnerable, yes, we started a pullback on the short term, but on the mid-long term, we are still bullish, we are still above the 50-day moving average, we are still above 200-day moving average, so not really, we cannot create here a real bear case scenario for a bigger correction. Remember that the March 2020 correction started with Apple below the 50-day moving average. It's not the case. Can we morph into something like we saw in March? Yes, but we need to break first, need to break Friday lows. We are still holding, and Apple was one of those names that held, and it's holding above Friday lows. 110.9. Friday lows were bought. Now what? Now we need to see continuation. We are in the middle of nowhere. We are above Friday lows, but below the 8 and 21 day moving average. So what I want to see next, I want to see if Apple is going to break above 1 to 1. That's my biggest level. Breaks above 1 to 1, bull case scenario. And from there we will evaluate. We have a big wall at 1 to 8, and we can have a $7 up all the way to 1 to 8, where I see a big level. But that will take time. In my opinion, Apple will not resume to all new all-time highs anytime soon. It will need time, in my opinion, but I can be wrong. But it will need time. But we are having the oversold bounce that I called on Tuesday, and we had that yesterday. Now we need to see Apple to break above 1 to 1 for the next leg up. Otherwise, if it fades, we have 110. Below 110.9, I have 107.9 50-day moving average. Below that, we have a gap to fill here. But once again, we need to see it. So, bear case scenario needs below yesterday lows, 115. Breaks below 115, we have a possible pullback, $5 pullback into 110. Below 110, we have 107.9. That's the if we are going down, okay? What I'm looking for a possible attempt to break 1 to 1, but we need first above yesterday highs, 119, breaks above 119, looking for 1 to 1. Breaks above 1 to 1, then I believe it will trigger some longs, some shorts will start covering and can fuel a big move up. We cleared the overbought conditions that we were seeing. Now we are entering the oversold conditions and looking for, give some time for the stock to rebuild and make something like we saw here, near the 50-day moving average, recover the 8 and 21-day moving average and regain the momentum. So it's a name that needs patience right now. Amazon, exactly the same thing. Not falling apart. Yes, we had a big correction, but it paused exactly where it should, the 50-day moving average. So it's very difficult to have a bear case scenario here while we are above the 50-day moving average. Remember that the March 2020 correction started, but Amazon was below the 21-day moving average. Right now it's above. Can we morph into a big correction? Yes, but we need to see it. That's why I have some levels to watch. We had the bounce from the 50-day moving average yesterday, day one. We need continuation. So we need above 33.30. Goes above 33.30, looking for a bull case scenario and the resume on the big bull run that we have been seeing. But once again, we need to see, we need stock above 33.30. If not able to go above 33.30 and stays below the 8 and 21-day moving average, the longer it stays below the 8 and 21-day moving average, the higher the odds we morph into a bigger correction. But once again, we need to see it. When the big correction will start, it will start, in my opinion, only below 3165 is the 50-day moving average and 3100. 3100 is my key level. Breaks below, I believe bad things will happen with a big move for the downside. So 3100 is my biggest level. But now on the short term, looking day one yesterday, looking for possible day 2, 3 bounce and an oversold bounce for one more day or two for a possible continuation on the bounce. Facebook, exactly the same thing. We had a big, massive bull run. One of the things that I highlighted last week, it was a bearish divergence on the oscillator. It played very well with the price going up, the oscillator going down. It was a bearish divergence, the yellow flag, and bang, the market, the stock corrected. Where it's right now, it's near the 21-day moving average. But I keep saying this, okay? The longer it takes to recover the 8 and 21-day moving average, the higher the odds we morph into a bigger correction. So what I want to see next, I want to see if the stock is able, my bull case scenario is above 282. Breaks above 282, I have $290 as the big level. $290 to 91, it was the biggest support. Right now will act as a big level, big resistance level. So breaks above 282, looking for 290, 291, big wall. Bear case scenario needs below 269. Below 269 can fall apart all the way with the 50-day moving average at 257. Apple touched the 50-day, Amazon with the 50-day, Facebook the same, but Netflix the same. But Facebook is holding here, didn't touch the 50-day moving average, showing some relative strength. But if it breaks below 269, can get nasty for a move into 257. But once again, we need to see it. Microsoft yesterday was one of the from last week, and from Tuesday it was one of the ugliest names. Why? It was the only one that was and closed below the 50-day moving average. But yesterday they fixed that, okay? They pushed price back above the 50-day moving average. So what I want to see next, I want to see price holding the 50-day moving average. 50-day moving average is a big level on the mid-long term. Bull case scenario needs above 216. Why? Is the 8 and 21-day moving average, and the bull case needs above that. Goes above that, what is my next level? 224. Why? It was the big support level, now will act as resistance. Once again, I'm expecting lower highs on this bounce, but that does not mean we go into a bear case scenario. We go, and what I'm looking is for something similar like this, where the market, we had a correction, we have lower highs, but we start looking for higher lows, and from there it resumes into new all-time highs. So it will take time. The impact from last week, it was a big one, it was a big correction. Now we need time and patience. It's a day by day. Netflix is exactly the same thing. Bounce where it should. 50-day moving average is the big support level. It bounced, and where did it stop? It stopped exactly at the 8-day moving average. So bull case scenario needs above the 8-day moving average, needs above 522, breaks above $522, we can scalp long and looking for a continuation up. Bear case scenario needs below 485. Below 485, we have 467. The big level breaks below that, and only below 467, I'll be extremely bearish for a possible rollover. It's something that I will be monitoring the next couple of sessions. If we are able to hold, the bull case needs to hold exactly $500 and break above 522. We wait to see. Google, it pulled back from last week. Last week we have, and it triggered some longs above 1660, printed a new all-time highs, and Google is exactly the same. When you have the tech leaders fading, the rest of the tech will also fade. So last week, Apple, Wednesday, big pullback, and even with Google making new all-time highs on that day, and Apple was the trigger for actually Tesla and Apple were the triggers for the big tech, some of the leaders for the big tech correction. So now we need to be patient and wait for what the hell is going to happen next. But the pullback took us exactly where it should. It stopped where it should, the 50-day moving average. If you see on the last pullback and last correction, it stopped exactly at the 50-day moving average. On this big downside, we pull back right into the 50-day moving average. So the 50-day moving average, it keeps the ball on the bull camp on the mid-long term. If you notice, and if you compare for the March 2020 correction, Google was below the 50-day moving average. Is not the case, at least for now. Can it happen? Can it go below the 50-day and stay below? Yes, but we need to see it. Right now, we are holding the 50-day. The bull case scenario needs to recover above the 8 and 21, needs above 1590, goes above 1590, looking for a move back into 1600, and from there we will reevaluate. One thing is for sure, on the mid, you are bearish, and we gone bearish on Wednesday on the tech names and on the FANG, looking for a correction, but that's on the short term. And what I'm seeing now is that the market is not falling apart. We are holding the mid-long term. So on the short term, yes, we are below the 8 and 21. But on the mid-long term, we continue bullish because the market is above the 50 and 200-day moving average. So you be patient, you wait, breaks above the 8 and 21-day moving average on the short term, it regains the momentum and resume back up. If not able to go back above the 8 and 21-day moving average, it's always the same that I keep saying. The longer it stays below the 8 and 21 day moving average, the higher the chance we morph into a bigger correction. The last correction started with price staying below the 8 and 21 and going below the 50 day moving average. Right now we are above. If we go below and stay below the 50 day moving average, then we can have a bigger correction. Not while that does not happen. So we wait to see. This is a day trading market right now. Since last Wednesday, when we triggered the correction and the pullback, this is the day trading market, and we look to generate cash flow one way or the other, and we take it day by day and hour by hour. Lots of news, lots of speculation on COVID vaccine, on AstraZeneca yesterday. A trial was paused, and lots of news coming into the market. We are going to elections, so that's why I always keep saying monitor volatility and trade wisely against those levels. So right now we are holding on the FANG, holding the 50-day moving average. We need above the 8 and 21. If we are not able to recover, then we can morph into something else, trend change, sentiment change, and we can morph into a bigger correction. But we will be ready for that if that's the case. Okay. Thank you all for watching. Don't forget to leave your comments. Give us a like. Don't forget to leave your comments below. And thank you all for watching. Don't miss the next episode. Bye bye, everyone. Thank you.